What are the steps to buying first real estate investment property? If you are interested in real estate and you want the steps to purchase your first real estate property so that you can start building your wealth over the long term and creating cash flow every single month, then this video is for you. I am Tiffany Thomas, your wealth mentor. I achieved financial freedom in my 30s and became a millionaire at 40. I'm here to help you do that even earlier and easier. Let's dive right in. All right, today we are going to talk about the pros and cons of investing in real estate, and then I'm going to walk you through the steps that I took to purchase my first real estate property. And one of the reasons I want to discuss real estate investing is because it made a huge difference in me being able to become financially free in my 30s. Some of the pros of investing in real estate is that you can create cash flow every single month. If you are doing a buy and hold real estate investing strategy, then you're buying the property, you're putting tenants in there, and then holding it for the long term. So you are creating cash flow every single month from the tenants that you are putting in your properties. Another pro of real estate investing is the appreciation. The longer you hold the property, then the more it is going to appreciate, the more it's going to go up in value over the long term. I know I have definitely seen this, and I'm going to share a specific example with one of my properties. Another pro is that it is a semi-passive income. You don't have to spend 40 hours a week doing real estate investing. You can have it be more semi-passive. For me, I only have a few properties, so it doesn't take that much of my time. I do have to fix things if something breaks at one of the properties, or replace larger items like a fridge or a water heater or a dryer, things like that. And I also have to show the properties to potential tenants. But honestly, it does not take 40 hours a week to manage real estate properties, unless of course you have tons and tons of real estate properties. And you can make it even more passive if you wanted to hire a property manager and have them manage your properties for you. I personally have the time and the flexibility right now to manage my own properties, and I don't mind doing it, so I choose not to use a property manager right now. There are also tax deductions that you can get by owning real estate properties. For example, the interest you are paying on your mortgage loan is tax deductible. And then if you are purchasing a dryer or a washer, things like that, then you can deduct those on your taxes and have deductions every single year. Real estate is also scalable. So if you purchase one property like I did, and I had roommates in that property, so I had cash flow coming in from those roommates, I was able to save up and purchase another property, and I only have to have a certain percentage down in order to purchase that property. So when I purchased my third property, I actually moved into that property and kept my roommates at my old place and replaced myself there. And then at my new place, I was able to get roommates there and start creating even more cash flow. And you can continue to do that over time. And another pro of real estate investing is that you can leverage other people's money. We can take out a mortgage from the bank and leverage their money. And that way we can put a certain percentage down on our property instead of the full amount. Comment below and tell me if I missed one of the pros of investing in real estate. And now let's move to the cons of real estate investing. And one of them I did mention under the pros, but it is that it is semi-passive, right? We could invest in the stock market and make it completely passive. But with real estate, it is only semi-passive, so there is some work that needs to be done. And like I said before, if you do hire a property manager, then you can reduce that work, but there's still work that has to be done on real estate investing. And you also have to deal with people. I know that I mentioned I like meeting new people, but when you have tenants in there and they aren't the best tenants, you're going to have to figure out the best way to work with those tenants. And if you purchase a property with an HOA, a homeowners association, you're going to have to work with the HOA, which sometimes can be difficult. And then another con is that real estate investing can seem really daunting or really overwhelming for people. And I can see why. You are purchasing a home for a significant amount of money, hundreds of thousands of dollars. And you have to make sure that you maintain the property, that you fix anything that goes wrong. You have to make sure that you have tenants in your property so you are creating that cash flow for yourself. And that can seem really overwhelming. But honestly, once you get started, it gets easier and easier as you go. And then another con of real estate investing is that it's not that easy to get out of your investment. If you're comparing it to the stock market, it is very easy to sell a share of a company that you've purchased or sell a share of an index fund, and you can have that money pretty much the same day. But with real estate investing, there is a lot more involved if you want to sell your real estate property. If you think the pros outweigh the cons, then let's move to the steps on actually purchasing your first real estate investment property. And these are the steps that I took in order to do this. The first step we want to take is to save up for our down payment. We're going to need that down payment in order to purchase our property, so we better start saving right now. And as you start to save this money, you can definitely save it in a high yield savings account. That is what I would recommend, so that it earns a little more interest rather than just sitting in a checking account or even a brick and mortar savings account. I personally like using Ally. They have a pretty good rate. It's at 4%, or I think it just went up to 4.25%. So that's pretty good if we are just leaving our money sitting in a savings, building up that down payment. And you may not know the exact amount for your down payment right now, but that's all right. You can just start saving and then you can figure out the exact amount later on. And to give you an idea, you can move into a real estate property with 3% down with some lenders. So you could save up 3% if you're planning on moving in. And then if you're not planning on moving in, usually it is a 20% down payment. And as a side note, if you are not moving into the property, you're also going to have a higher interest rate on your mortgage loan. And then step 2 to buy your first real estate investment property is to decide on the property type. What kind of home would you like? Would it be a single family home, or would you prefer a condo or a townhome? The first home that I actually purchased was a townhome. I didn't want to have to worry about taking care of the yard or replacing my driveway if it started to crack, or replacing the roof. And if you do decide to purchase a townhome or even a condo or even some single family homes, make sure that you know the HOA amount so that you can factor that into the cost of purchasing the property. And then another thing to consider if you are looking at a townhome or a condo, realize that that is most likely not going to appreciate as quickly as if you were to purchase a single family home. And then you'll want to decide if you want a newer property or an older property. I like purchasing a newer property, not brand new, but the newer it is, then the less likely you're going to have to replace things like a furnace or an air conditioner sooner than later. Of course, if you are holding it for the long term, you eventually will have to replace those things, but the newer it is, then the less you can spend up front replacing things or fixing things. I also like purchasing properties that are in good condition that I can rent out immediately, and that way I can start creating cash flow right away instead of having to wait and remodel the property and then put tenants in there. But it's entirely up to you. If you are very handy and you like doing remodels, you can do them very quickly. Then maybe you do want to purchase a home for a lower price, remodel it, and then put tenants in. You'll also want to consider how many bedrooms you would like. I like renting to singles, so I like to have more bedrooms rather than less bedrooms. And when I was starting out, I was really nervous to do this. So with my first investment property, it was a 2-bedroom, 2-bath condo. And I just thought I better start small and see if I like this. And I did like this, do like this. So now I would look at properties that have at least 4 or 5 bedrooms. That way I wouldn't have to purchase 2 separate places with 2 bedrooms each and then manage 2 separate properties. I could just purchase one with 4 bedrooms. And if you are looking for a place to live in and have roommates or have other people living with you, you could even look at a place with a mother-in-law basement apartment. And that way you could rent out the basement and have it be completely separate from your own living space. And then I also took a look at the location of the property. I like purchasing properties that are in good locations, that are nearby the freeway, nearby the canyons, in a good, safe neighborhood. Since I am managing them myself and renting to usually single females, I want them to be safe properties so that I feel comfortable showing the place, and then I have a safe place for the single females to live. And they're usually easier to rent if they are nearby shopping centers or they have easy access to the freeway. And since I live in Utah, if they are close to the canyons, that is just an added benefit as well. And then I also chose to purchase all of my properties within about 15 minutes of each other. That way it made it easier for me to manage all of my properties myself. And when you are looking at investment properties, even if you're going to be living in that property, it's probably not your final destination, your final home. So just remember that it is a rental property, that tenants are not going to take as good of care of the property as you would, and you don't need to have everything be perfect and in amazing condition. All right, and then step number 3 is to find a real estate agent. I know not everyone likes working with an agent, and sometimes people use Homey, but my preference is to use an agent. I found it a lot easier because the agent already is familiar with the real estate market. They know what the home prices should be, what the value of the home is, and they can also put you on a hot sheet for the MLS, and that way you can get properties sent to you in the locations that you are looking for. And they can also create the contract for you and set up all of the showings for you and just have someone on your side. And you can also look for properties on your own. You don't just have to go with the properties that your real estate agent is sending you. And then step number 4 on buying your first real estate property is to look at homes that meet your criteria. You'll want to run your own numbers and make sure that you can actually afford the home that you are purchasing and that you are making the cash flow that you want to be making on that investment property. And when I was first getting started, I thought if I just made a couple $100s extra after taking into account all of the expenses associated with rentals, that would be good, because I knew that eventually I could pay off the mortgage and increase that cash flow, and I knew the property would be appreciating over the long term. For me, I didn't need a huge profit for my properties. It could just be a couple $100s, and I was fine with that. There are a lot of mortgage calculators online, so you can just pull up a mortgage calculator and figure out what the payment would be, and then also remember to include an HOA fee if there is one. You'll want to include your taxes and your insurance, and then also a percentage for any repairs that you might have to make. And then step number 5 on buying your first real estate property is to make an offer. If you go see a home and you are interested in that home, then you need to make an offer on that home and hopefully get accepted. And when you are making offers, it's nice if you are pre-approved with a certain lender, and that way you can give your pre-approval letter to the seller, and it could make them more inclined to go with your offer if they know you are already approved for a loan. And when I was doing this, I would get 3 different good faith estimates from 3 different lenders, and that way I could figure out who has the lowest rate and who has the lowest fees. And also, I did not have everyone run my credit score. I knew that my credit score was high already because I keep an eye on my credit score. One way that I do that is through Credit Karma. It's a free app that you can use that shows you your credit score. But I didn't want to have all of these different lenders running my credit because that will ding your credit score. So I just told them run the numbers on the estimated credit score that I gave them. And then once I decided to go with that lender, and I had a property in mind, then I would have them run my credit score, because there's a limited time that your credit score is valid for. You'll want to make sure that you aren't pulling your credit score too early if you are still in the early stages of looking for a property. And you'll definitely want to know your credit score, or at least a close estimate of your credit score beforehand. Because the higher your credit score, then the lower interest rate you're going to get, which means you are going to pay a lower amount of interest on your mortgage loan. And once you have made your offer, once your real estate agent has sent that offer over to the seller's real estate agent, then hopefully they accept your offer, or you could even be a backup offer, and that means if the first offer that they accepted falls through, then they would go to your offer. And that's actually what happened with my 4th property that I purchased. I was one of their backup offers, but the first offer fell through, and so they reached out to me and asked if I was still interested in the property and if I wanted to move forward, and I said yes. And then I just wanted to share my personal example on when I purchased my 3rd property. I purchased it in 2016 for $211,000, and then I ended up selling that property in 2021 for about double. It was $420,000. So not only was I taking advantage of that appreciation, but I also had cash flow from that property every single month, because I had, in the beginning, I had 2 roommates living with me, and then I ended up finishing the basement and had 3 roommates living with me. So I created a lot of cash flow while I held that property. And if you want more details about me selling the property, I have another video breaking those down for you. I will leave a link above. You can check it out later on. And I realize not every time we purchase a real estate property that it's going to double in value in 5 years. But I just wanted to show you what the possibility is. That could happen. It is an option. But when we are investing in real estate, I like keeping the long-term perspective and just planning on buying and holding the property for that long term. And if after hearing all of these steps, you're thinking, I don't really want to invest in real estate, I would rather stick to the stock market, I have a free masterclass where I go over how I can help you invest in the stock market. I will leave a link below in the description. You can click on that and check out the free masterclass. Comment below and tell me if you are going to invest in real estate or not. And if you found this video helpful, please hit that like button and share it with someone else who would like to hear this information. And hit the subscribe button to subscribe to my YouTube channel and hit the little bell to get notified on when I post new videos. And if you want to see even more awesome content from me, make sure and check out the videos on the side of the screen. Thanks so much for watching. I'll see you in the next video.